Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Senior Technical Analyst with Market Rebellion, and this is a one-year daily candle chart of the IWM. This is the Russell 2000 ETF. And as I zoom in here, you can see that we did hit my upside target from last week's report, which is 176.12. And today we closed over that 20 period moving average on higher volume. Now remember, last week I was talking about the moving average acting as resistance. I still believe that we have resistance above the market right here, which is a gap fill point. Therefore, I think Monday and Tuesday we could go up to fill that gap, and then we'll have to keep an eye on the volume to see whether or not the volume drops. If the volume does drop, then there's a good chance we will pull back from that gap fill point. If you follow along with my gap fill rules, you'll know that 80% of the time gaps do fill, and then once they fill, we see a pullback or a reversal from that point. Now, if I look at QQQ, this is the NASDAQ market, this is the NASDAQ ETF, and you can see that we are not yet at my target price of 273.39. However, I do believe that we're going to get there next week. I do think that we will see a slightly higher price than what this moving average is showing right there at 272.08. And therefore, I'm going to keep that up there at 273.39 as my price target. So stay tuned for that. Also, remember, on Wednesdays, I do the midweek report right after the close. And we have a special event where Pete Najarian and I will be talking Tuesday after the close, where we're going to be talking about Tesla, Amazon, Apple, some of the favorite stocks out there, and then we're also going to be taking Q&A questions from the audience along with ticker symbols that we'll analyze. So go to marketrebellion.com and look for that link so you can register for that. Even if you can't make it live, you'll still get a copy of the recording. So they'll email you a link to that recording if you can't make it live. So that's going to be a good one on Tuesday. And then we have the follow-up midweek report on Wednesday. So again, my cues I'm keeping in place right there. If I look at the diamonds, it's ticker symbol DIA. It's the Dow Jones Industrial Average ETF. We did hit my upside target from back here. And again, same story. We see an increase in volume on the way up. Notice down below, see how the CCI is extremely overbought at this particular point in time? That means that we are in the realm here of possibilities where we can go higher. And I'm going to put that Dow a little bit higher at 339.41. And just like what I mentioned in IWM and in the Qs, you have to watch that volume. If we get a drop in volume on the way up, that could be our signal that we'll start to see a pivot point lower. Now, if I look at SPY, this is the S&P 500 ETF. Today, we officially hit my upside target, which was set at 386.71. We absolutely hit that. We have a higher volume day. This is also a gap fill here, but we have another gap open above the market there. Not quite sure we're going to see that next Monday or Tuesday, but I do think that the upside gap will draw the price of this SPY ETF up, and I'm going to put an upside target of 392.84. So 392.84. Let me get rid of that previous target because that is hit. Again, 392.84 is my upside target. The CCI is overbought already, so you have to keep an eye again on that oscillator, because if you see the CCI start to pivot lower, the CCI within that formula has a built-in calculation that measures momentum. So if the CCI starts dropping, that means that the momentum is changing there. Now, finally, the VIX. If I look at the VIX, you're going to see that we closed today with a bearish engulfing candle. You see that? So today's bearish engulfing candle completely wiped out the bullish harami from yesterday. Now, my downside target on the VIX is still set at $20.14. We did cross down below the CCI momentum line right there. And when that happens, we generally see 2 to 4 days of continuing momentum in the direction of the cross. So I do believe that we're going to go lower on the VIX. Therefore, I'm keeping that downside target in place at $20.14. So stand by for that. Now, let's take a look at the geopolitical news. There's not much that I have for you this week. I have pulled up the PMI. You can see that this is put out and showing a contraction. This is the sixth straight month of the PMI. This is a purchasing managers index, by the way. It's a leading economic indicator. You can see that was still heading lower. And JP Morgan put out a similar chart showing that the PMI is continuing to drop. Now, notice something here. They're not talking about this on the financial programs all that much, but in 2007, we started breaking out below this level here. Well, you can look at that as a support level if you like. It's not really a support level. It's just more or less a reading on this scale. But we're in negative territory right now with the PMI. And there were 2 times over the past years that we closed below that. And you could see right before the COVID crash, the PMI was going down. So it's interesting because how do you more or less forecast a COVID epidemic, right? But that PMI was dropping long before the COVID crash. And again, we have this downturn in the PMI. Keep an eye on that because, again, the financial programs are not picking that one up. They're also not talking too much about what the survey that came out. Wall Street Journal took a survey that surveyed 23 major financial institutions, and the big banks are predicting the R word. Again, something they don't want to talk about. The recession is most likely going to hit us, and I believe it's going to hit us hard. So keep an eye on that. Wall Street Journal is a subscription-based service, obviously online, and you can pick up news from there. I'm not promoting the Wall Street Journal, obviously. It's just where I got that news from. And then Reuters, again, puts out a warning by the IMF that the inflation has not yet turned the corner yet. So this is still very much a real threat. Keep an eye on that. And, of course, leading indicators like pending home sales still sagging lower, right? We're lower than what we saw in the November month here. Again, I talk about that quite a bit. And you also have to look at the unemployment rate. This came out today through Bloomberg, and you can see that down below here, the unemployment rate is starting to tick up. And notice that when that happens, we generally get caught in these recessionary periods in time, right? So this is another leading indicator that you have to watch out for. Yes, short term, I'm looking for a slight rally into early next week, but I think that the month of January will still end with a lower reading than what we saw on the month of December. I'm going to just show you one last thing on the Qs right here. If I look at Qs on a monthly chart, I just want to show you this, and I'm going to wrap things up for you. If you look at the monthly chart here, you could see that we had a big bearish engulfing candle right here, followed by a bearish harami, a shooting star, and as well. And then we ended December with a big fat bearish engulfing candle. If in the month of January, we simply show a lower low than what we had in December, and we're not far off from that, if at any point in time in January we go to a lower low than what we had back here, then we will officially have a pivot point, which is signaled by a lower high, lower low. If we get that pivot point right at this major trend line, once again, I keep my bear claws sharpened, and that could mean watch out below. So January is going to be an important month for a lot of the traders and investors especially. So make sure you keep your stops in place. Use the 1% rule when managing risk. Stay tuned to Market Rebellion. Stay tuned to my midweek reports. And hopefully I'll see you on Tuesday with Pete and Najarian. So have a great weekend. We'll talk to you then. Bye-bye.
I mean, you take a beginner and someone who's a little naive and doesn't really understand how options and stocks work, and then you can actually educate them to have more knowledge than a lot of the brokers. Brokers don't even understand a lot of stuff you guys teach. In fact, I just talked to a broker. He says this is the only place that's taught in America.